Oh, Jay. Hello, Terry. How are you guys doing today?
Doing good, Sherry. How about yourself?
There's some data coming out this week, but I think the most important is all eyes on Jackson Hole, and that's what we would like to discuss with you guys today. So how about we start with the Fed meeting minutes yesterday and also the job data and the PM data this morning, and maybe you guys talk about your expectations to how market will react to the Jackson Hole speech from Jay Powell tomorrow.
I'll start off there, Sherry. Just to your points, we got the Fed minutes yesterday, and I definitely feel that the market was treated to slightly dovish rhetoric from the Fed. In particular, there was one area that was breaking down some of the monetary policy expectations, and in it, we saw that there was a very lively debate around a possible 25 basis point rate cut, as some participants were very much interested in cutting rates 25 basis points. However, they did decide to hold off and await further data before making a move. So right there was certainly of interest for the markets, as we know the Fed didn't cut rates, but the fact that there was a lively debate around it. Then when we dove a little bit further, the Fed, and it's always provide nuances in terms of the number of participants that are behind a certain policy. You'll see vast majority, most, all these adverbs used to describe the battle between the Fed members on who's on what side of the tape. And one of the things that we did see was that the vast majority of the Fed members appeared to be in favor of a 50 basis point cut. Now, there were definitely a number of participants involved on the 25 basis point cut side, and a few others that suggested that some further data would be appropriate. But just looking in total at those minutes, it certainly hammered home the idea that the Fed's getting ready to move in September. Now, there's been some other data points that have also come out here. There was the revision behind the jobs data, where 818,000 jobs were reduced between the time frame of April 2020, March of 2024. So we know that one of the biggest reasons the Fed hasn't wanted to move is because of the strength of the economy, or the jobs market, I should say. That report certainly took some of the shine off the strength that we've been seeing there. And then the PMI numbers this morning, where they pointed to a little bit of weakness going on in the manufacturing side, and further cooling into pricing pressures that would also allow the Fed to move. So collectively, when we're looking at the minutes and some of the most recent data points, if the Fed is going off the idea that they are data dependent, then that certainly increases the expectations for Powell to strike a dovish tone. Whether it comes out explicitly with the idea that they will cut rates is in the next meeting certainly remains to be seen. Powell put a little caveat saying that they'll remain dependent on data. There's some big data points coming down the road. PC on the 30th, you got the jobs number on the 6th, and CPI on September 11th, all coming out before that September 17th meeting. But overall, when we're looking at things, certainly points to Powell hitting a dovish tone. Terry, I don't know what you've thought about the numbers this week, but I'd be curious as to if you would agree with that stance.
You know, I think that captures reality, but I think at a certain point, we're looking where the Fed is a long ways above neutral, and they're openly stating that they think that the upside and downside risks are pretty much balanced. And that's a very strange position for the Fed to be in. And the question is, how to talk about cutting. I think there's no question about it. It'd be a huge letdown if he doesn't, because it's not about economic weakness at this point, really. It's just about, again, they're a mile above neutral, and they've gotten to the point where, inflation is now target range officially, that 2 to idea. And when you look at core PCE on a 3-month annualized basis, it's at 2%. Dovish stated that. So I think that Powell's going to be talking about adjusting interest rates to bet we're in, and to remove downside risk due to policy error, because that's what you've got on the table right now as the most pressing risk that we have, is downside risk to the economy due to Fed policy error, because they're keeping rates too restrictive during a period where risks are balanced. Powell knows that. I think he's got to find some way or other to address that. I don't know if he's going to talk so much about the September meeting as much as he is talking about just sort of the glide path forward. They're going to get some way, over the next 3% or so. And is it going to be, a 50 in about the pace of that move? The way that, if you go to 2004, 2005, when they talked about, we're going to point every meeting. That's going to be what we're doing now. Like that was openly stated to get rate up. I think we more something along those lines where we're not just talking about September. We're talking about a glide path if we don't see any sudden crazy surprise on the inflation front.
Got it. And looking at today, in the morning, it has a big drop, especially after 10 p.m. after the data. Nasdaq drop around 0.6. Forecasting tomorrow, and when I'll talk about the interest rate cut, do you guys think now maybe it's a time to buy some of the stocks or ETF that will benefit from the rate cuts, something like IWM or TLT?
I mean, right now, you much leverage in the Treasury futures market. It's crazy. So people have already overbet on this move, I think. And probably you could look at that leverage and you can extrapolate across other asset classes, dollar shorts, equity longs. I think that's in there. And Powell has a really high bar to excite the market on this theme.
I would say this. I don't know immediately tomorrow in terms of buying those names. Now, there's wild card that needs to be mentioned ahead of Powell, and that is at approximately 9:30 p.m. this evening in U.S. time. Bank of Japan, he's going to be stepping in front of Japan's parliament and explaining to them the recent rate cut that the BOJ did. Now, that, of course, set off the motions running on that August 5th sell-off where you saw that carry trade really pick up steam and unwind when, this came after the BOJ surprised the markets with that rate hike. And then, of course, the weaker jobs number. And what you had there was the idea of the U.S. cutting rates while Japan is raising rates. And it brings in a dynamic that's going to be occurring in front of Powell, where if Ueda strikes a very hawkish tone there, and then that gets coupled in with Powell providing very dovish commentary, you can see that spread between the 10-year yield for the Japanese yen and the U.S. dollar right below the 2.90% area, which has been a very key support level for that spread. If you see that spread breaking, the easiest way to follow a rally in the yen, if you see that occurring, and then, of course, watching the 10-year yields, that could rattle equities in front of Powell. And that's just one aspect of that the market needs to be watching in terms of the overnight action that, could offset the perceived to the general reaction to what Powell is saying. So investors need to be aware that this is coming in front of Powell. And in the context of the Powell commentary and the Ueda commentary, that could really disrupt that carry trade and cause some of the leverage that's in the market to provide a little bit of volatility. So just be aware of that dynamic out there. I think that any sort of a pullback on that or any sort of sell the news reaction to a dovish Powell would set up a great buying opportunity for these interest rate sensitive names. You mentioned unwind a little bit. Small cap unwind would be some areas to watch. Another area would be real estate, the IYR. That could provide some opportunity. I really think home builders present a great opportunity for buyers there if we do see Powell and company coming to there. Not only would you have a tailwind from central bank monetary policy, but you also have Kamala had some tax-sensitive issues that would spur the housing market. And I think a name like the ITB or some of the home builders there which continue to be pretty cheap despite good fundamentals, would represent a great buying opportunity. So there are a few of the areas that I'd point out to, but you really need to be aware of what goes on overnight and the Bank of Japan comments before we get into Powell, just so we can get a really good feel of how the market's reacting to his comments.
Got it. So yeah, definitely gonna keep that overnight as well as the House speech tomorrow. So Jay, I saw you also have premium article coming, so our viewers can also look at to that premium articles about Jackson Hole expectations. That would be very interesting.
Yeah, we cover the VOJ commentary, so highly recommend people to check out that article and get yourself prepared for Powell comments.
Okay, cool. Maybe we'll just stay and we'll come back later for the Powell's speech review and keep our viewers updated.
Good, Sherry.
We'll circle back tomorrow, Sherry. Thank you very much.
Yes, thank you, Jay and Terry, and we will talk to you guys soon.
Okay. Take care, guys.
Yeah.